For the group project, our team chose the telecommunication industry. The selected companies are the four main players in industry, which are Digi, Maxis, Telecom, and Axiata. Stockholder analysis. In this section, we attempt to identify the marginal investors in an effort to understand whether the basic assumption of the CAPM methods are applicable. In the event that the marginal investors are well-diversified institutional investors, the assumption behind the CAPM is satisfied. Among the companies, Telecom has the highest institutional investors, including mutual fund investors, which hold 63.43% shares in the company, while for Digi, Maxis, and Axiata, most of the shares are held by direct holders, which account for more than 50% of the shares in respective companies. Based on statistics above, all the companies has a beta less than 1, which indicates that the investment is less volatile than the market. Axiata and Maxis has beta nearer to 1, which indicates more volatility compared to Digi and Telecom. Axiata's cost of debt is the lowest among the four at 3.38% and give the company a competitive edge, as the cost of Telecom, Digi, and Maxis are all more than 4%, which Telecom has the highest at 4.82%. Cost of equity for Maxis, Axiata, and Digi are more than 7%, while Telecom is the lowest at merely 6.65%. Weighted average cost of capital (WACC) is the return that both stakeholders, equity owners and lenders, can expect. WACC also represents the investor's opportunity cost of taking on the risk of putting money into a company. Telecom has the highest WACC at 5.16 and Digi has the lowest at 3.65, while the Axiata and Maxis both have a slight more than 4.0 WACC. Investment analysis. Among the companies, only Telecom has awarded with new projects for 2015, which are HSBB and SUBB projects. However, all the companies continue to invest extensively in telecommunication assets. Digi, for example, invested a total amount of nearly 3 million in capital expenditure from 2011 up to 2014. The cash and the cash equivalent for Telecom is still positive and is higher than 2014 due to the capital contribution, both through borrowings or equity portion, as the cash flow from operating activities decreased in 2015 compared to 2014. Axiata recorded significant deals or partnerships in addition to its continued investments in digital assets. However, the return on invested capital is declining since 2011. Cash flow used in investing activities also slightly decreased in 2015 as compared to 2014. Maxis invests 1.3 billion based on capital expenditure investment in the network modernization initiatives is contributing to Maxis 4G leadership's position in the market. Capital structure analysis. Axiata has the highest and Digi has the lowest in total assets, equity and liabilities. Both Telecom and Maxis have almost the same number of the total assets, equity and liabilities, which is medium in nature when compared to Axiata and Digi. Based on data, it shows that Telecom registered the balanced amount of capital structure with 50% of equity and 50% of debt. Both Axiata and Maxis has almost the same capital structure with equity ratio of around 20% and debt ratio around 80%. Digi, however, has the highest debt ratio at 88.47% and the lowest equity ratio at 11.53%. Dividend policy analysis. For Digi, quarterly dividend payment based on a minimum payout ratio of 80% of net earnings. For Axiata, yearly dividend payment of at least 30% of its consolidated profits after tax attributable to shareholders after minority interest PATAMI. For Telekom, yearly dividend payment of Ringgit Malaysia 700 million or up to 90% of our normalized PATAMI, which is higher. And finally, Maxis, yearly dividend payment that targets at payout ratio of not less than 75% of its consolidated profit after tax. By taking into consideration of volatility and degree of risk, Digi dividend policy will give more advantages. Valuation analysis. Digi recorded the highest return on equity, retention ratio, and expected growth rate. However, the expected rate of return for Digi is only 22.6%, which is quite low compared to the expected rate of return for Telekom and Maxis. Telekom expected growth rate is the lowest at 0.91%, but the expected rate of return is moderate compared to other companies at 32.44%. Axiata expected rate of return is also quite low at 1.54%, and the expected rate of return is the lowest at 21.54%. Maxis, on the other hand, has an expected growth of return of 5.62% and has the highest expected rate of return at 55.62%. As a conclusion, from investor perspective, Maxis will be the most attractive investment in telecommunication industry based on the highest expected rate of return and high dividend payout ratio. However, the investor also need to consider the high risk based on the calculated beta and high debt ratio because their interests are not protected in the event of business decline.